Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is advanced charting techniques and with the markets having advanced so rapidly and recently starting to encounter apparent price ceilings. I think for some investors, they might be wondering, is the stock market a little too overheated? Is it set for a pullback? Well, today we're going to be talking through three chart indicators that some technicians might look to gauge whether the stock market is overheated and due for a pullback or not. Should be a good discussion. Before we get to any of that, though, let me first of all say hello to everybody who's chatting in out there in the YouTube land. Great to see all the familiar names. Hello to anybody that's here for the first time, but hello there, Will and Kevin, Jay Richardson, Richard, Michael, Olga, Scott, Rojo, and everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. And yes, if you are among those who are here for the very first time, I do want to welcome you as well. If you're watching on the YouTube archive after the live stream has concluded, enjoy the recording. That's a great way to watch these webcasts. But if you'd like to be here in our live stream audience, you're certainly invited to join us. This is a Friday webcast series. We kick things off promptly at 1 Eastern time. Now, I also want to let you know that my very good friend Mike Fairborn is hanging out in the chats with us. Mike's going to be keeping an eye on any questions that come in, and if I can't grab those, Mike's going to pick up my slack for me. Mike and I have been working together now for the better part of 2 decades, so he brings a ton of experience to this discussion. Thanks, Mike. Mike and I would also like to issue an invitation to everybody watching, whether live or you're watching on the archives, to follow your favorite Schwab presenters on social media. You can find us on X, you can find us on LinkedIn. You can find Mike there on X at Mike Fairborn CS. You can find me on X at Cameron May CS, or you can pop over to linkedin.com/in/Cameron May CS. Will take you right to my profile. Give me a follow there. But let's get into this discussion. And as we do, of course, first thing that we need to do is consider the fact that trading and investing involves risk, so bear this important information in mind. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so with that said, let's set the agenda for today's discussion. First thing that we're going to do is we're going to see what's going on with our 2 positions in our example portfolio. See if there's any management that might need to be done with those. Then we'll take a peek at the markets through our trend, value, and momentum strategy set. But then we're going to mix things up a little bit and sort of take the position of an investor or a trader out there who has seen the run-up that we've had over the stretch of the last 5 or 6 months. But they might be concerned about this ceiling that's kind of set in on prices. How might we gauge whether the stock markets are potentially overheated? Well, toward that end, we're going to employ 3 chart indicators that some traders might use in their efforts to gauge whether markets are overheated or not. And then we'll use that as a backdrop. We're going to go plan and place a brand new position in our example portfolio. All right, so that's what we're going to be doing today. Let's get right to it. Let's go right to the Thinkorswim desktop trading software platform. This is the paper money or the simulated version of trading. And here's our example portfolio in our advanced charting account. We have 3M and we have PFE. 3M is last week's trade, bought 63 shares. Right now they're doing well, but kind of fading today. That doesn't really distinguish it from other stocks. A lot of stocks pulling back today. But let's go to the charts, revisit the logic of this trade. So 3M this trade was constructed using what we call Keltner channels. And what we had noted is that we had come down below our 20-period SMA. We had touched that lower channel and started to rise into Friday's discussion right here. So that's when we took our position with the plan that if we could get back up to the upper channel, the upper band, we would take profits. We also have a plan, if things didn't work out, we have a stop in place right down here at 52.5. So far, so good. Prices continued higher, but not today. A little bit of a pullback, net down about 0.38%. We were up fairly sharply earlier in trading. We've kind of faded. But a couple of points I want to make here. First of all, if you missed this discussion, just like the vast majority of our webcasts, it was recorded. You can go check out the archive. To do that, make sure that you are subscribed to our Trader Talks channel. You can go right down below the video stream right now, click on the subscribe button. It doesn't cost anything to do that. It only takes a moment to do that. But this channel, Trader Talks Schwab Coaching Webcasts, is where you can join our live streams like we're doing right now, or you can watch previous ones through what we call our playlists. So we have a lot of playlists about a bunch of different webcast series on a range of topics. This Friday webcast series is Advanced Charting Techniques, and it's kind of located about halfway down the page. So if we scroll down, keep scrolling until you see there's my face and Advanced Charting Techniques, and you can see the view full playlist right here. And right here, you can see the recording of the discussion in which we found and placed this trade using Keltner channels. All right, that tells you what Keltner channels are, how they're constructed, how they might be used to generate trade signals. And that takes us to this one. Now, the other thing that I wanted to talk about here, first of all, was to make sure that you knew how to subscribe. Secondly, though, what might a trader do as we're making progress toward our target, but we're not quite there yet? What about trade management? Well, our stop is still waiting way down here. And what's happened is as price has gone higher with our stop just being static down below, the risk per share is just going up and up and up. So for some, when we cross that moving average, that may be in the event of a pullback. Sometimes we anticipate that it might act as a support. And you can see it actually has done a really good job as a support all through this trend here. So for some, they may move their stop up once we've crossed above that moving average. So how about we do that? Looks like 160 is just a little bit below this moving average of 160.54. Should we give it a little bit more wiggle room, maybe go down to 159.5? How about we do that? Let's move this up from 152.5 to 159.5, theoretically trimming the risk by about $7. Now, obviously, a gap could change that risk proposition. This is not a guarantee that we'll sell for wherever the stop is. The stop is just a trigger. But let's go put that stop. Let's go move that stop. I'm going to go to our, actually, you know what? One thing we don't have here, let's come up here to our chart settings. And right here on the general tab, we can check this box for show orders. If we click apply and click OK, there we see our stop. And we can actually just then click and drag what we call the pill. It's kind of pill shaped right here. Let's drag that on up to about 159.5. Let's go. There it is. Actually, I nailed the 159.5. So we're going to move that up. All right, looks like it's going to go for 159.49. We're off by a penny. That's okay. I'm going to go ahead and send that order off. But again, as a reminder, a stop is not a guarantee that we'll sell at a specific price. That 159.49 sounds really precise, but we're not guaranteed that that'll be our exact sell price if the stock falls. So let's send that off. And let's go have a look at PFE. PFE is actually kind of similar, different trade logic, similar sort of progress. Let's go to PFE on our charts. Now, in this case, if we come up to our studies, let's load up the study set here for PFE. And with this one, we use the market forecast tool. And our market forecast tool, what we saw was what we call a bullish cluster. All three of our stochastic indicators below 20 on the same day in that oversold condition. And so we thought that maybe that's getting close to a price floor. So we bought 400 shares at 24.11 with the hope that we can get back up to previous highs. And it's been working its way in that direction. Yep, fading a little bit today with so many other stocks, but our stop still down here at 23 bucks. How about we move this one up as well? And in this case, maybe the trader just employs their own discretion. It looks to me like there's a pretty good previous resistance right through here. You'll notice about that 24.5 level. The stock really refused to get above that for a couple or 3 weeks. Finally pushed through on a strong white candle. Maybe that'll be a new support level. How about we move this stop up from 23? How about we move that up to, let's say, 24? Do we want to go up to 24.5? How about we back off 24.25? Right? So here's our stop right here. Let's nudge that up. 24.25. And let's get it as close as we can to a quarter. Should be able to get this pretty precisely on a lower price stock. All right, it's going to skip a penny. That's all right. That's okay. We'll go for 24.24, and I'm going to send that order off. Now, as before, stop is not a guarantee that we'll sell at a specific price. There's not a commission on either of these two trades, but there can be on some types of trades. All right, so those are our current positions. If you want to see this discussion of our market forecast, you just want to go back and watch the video that we recorded on June 26th. But let's get on with a new trade. But I wanted to get some market context. Now, we always get market context, but I wanted to look at things through a slightly different lens. But let's go to the S&P 500. And each week, we do view the markets through what we call a trend value momentum technical lens. So let me go up to my studies here, and let's load up our TVM strategy set. And this is a set that a technical trader might use to look at a combination of three factors. What's happening with trend, what's happening with short-term value on stock prices as they move, maybe moving through short-term cycles, and also what's happening with short-term momentum. So the first thing, looking at trend, we use a combination of a 50 period and a 100 period triangular moving average. Those are two trend lines. One's kind of intermediate, the other one's leaning a little bit longer term. And if our green intermediate trend line is rising above the red, it's kind of rust colored, isn't it? Anyway, this reddish longer term trend line, typically the interpretation would be that our upward trend is still intact. I think it's interesting that price actually sagged back. If you kind of squint at this, the S&P 500 pulled back down to its 50 period triangular moving average, and it seems to be catching a little bit of a floor there or a support. Is that a guarantee that that's going to stay on that support? No. But I think for trend, we might go check. That looks pretty good for the bulls. What about value? Well, our typical value indicator is if our RSI gets down below 40. It got close to 40 recently. That was at this low. But since then, it's kind of moved into the middle of the range. Right now, a value of 51. That's kind of neutral. It's not overvalued, not undervalued through that lens. So we'll just say neither bullish nor bearish, just kind of neutral, looking okay. Down here, what's going on with the MACD histogram? That's our momentum indicator. Now, typically what a trader might be looking for if they're looking for a new entry, we're not looking to buy the S&P 500 today, but if they're looking for a technically optimized moment for entry or technically optimized area of support using the MACD histogram, that might be when we get what I refer to as a red shift. It's when the momentum has been going down as measured by these downward facing red histogram bars. When the bright red changes to that dark red, that's what I would refer to as a momentum, as a red shift or a momentum shift. The concept being that the sellers have been firmly in control and maybe the buyers are starting to step in. Not a guarantee, it's just an interpretation of that. But looks like we had a red shift here. There was one right here. Right now, though, it's still green. Green is not bad through a traditional lens of the MACD histogram. When it's green, we see that as just sort of current buying momentum. So if we were to bottom line this, that's a check for the trend, that's a check for momentum, and sort of neutral value. But I want to clean things up. Let's shift gears here. We look at this from week to week at this TVM view, but I think that there might be plenty of technical traders out there. Actually, let me do this. Let's go up to studies and just remove all these studies. There we go. That's what I wanted. Nice clean chart. And I think here's what might be top of mind for some traders. I don't know individual traders. I don't know what everybody's out there thinking. But look at where we were March 30th. Look at where it went in just a couple of months. So we rocketed up right here. Let me hold on. Let me rephrase that, or at least I need to give context for the word rocketed, right? It's a strong word. Well, compared to other times this year, at least, this was the fastest rate of ascent that we've seen on the S&P 500. So that's what I mean. But yeah, the S&P went for a very strong move to the upside right through here. But then, kind of starting here, moving up through there, somewhere like that, we started to hit potential resistance, and really the S&P has struggled for these now about 3 months. Is it two months and a little bit of change, let's call it, where we've kind of run into price ceilings here. And can you imagine with me that maybe some are looking at this and starting to wonder, wow, maybe we overran the mark, we overshot the mark here. Maybe the markets are overheated. I wish there was something to tell me other than just an observation of price movement. Are the markets overheated or not? That's a good question. And for some, there's a combination of 3 charts that they might check to get a little bit better feel, where it takes some of the pressure off of the discretion and moves it more toward an automated view of how hot or cold the markets have been. So let's ask ourselves 3 questions about the markets to put them into context, right? Number 1, has this big move actually moved the S&P away from what we might call a normal condition? Are we overextended? It's a good question. Let me right click here. Let me clear the drawing set. And there's a set of technical indicators that we've explored in the past known as linear regression lines that might assist with this sort of an effort. So if you haven't seen that one, just remember, make sure that you are subscribed to our Trader Talks channel, because you can go to our channel, channel homepage, and you can do a search. And this is going to apply to everything that I discussed today. So for example, if I type in the word linear, I do a quick a quick search of previous webcasts, you'll see this discussion we have combining 3 linear regression line tools into one trading strategy, right? But I want to apply that to the S&P 500 right now. So I'm going to come up here to our little Flask icon, our Edit Studies icon, and let's add the linear regression line. And we're going to be using these 3 tools here to help us potentially answer one question, and that is, are the markets really overextended from a quote-unquote normal condition? So let's add 3 linear regression tools. Linear regression trend line, let's add that. Linear regression channel 50, and linear regression channel 100. I'm going to summarize how these are built. I'm not going to require that you go back and watch that video. I would suggest that you watch that video. But here's our linear regression lines, so let's talk about them. We have the one in the middle, that's our linear regression trend line. And then we have 2 other groups of lines. We have these green lines, and then we have these red lines above and below that trend line. So what are these? Well, starting with the most distant ones, these other red lines, all this does is it looks at, well, actually, I should start with a trend line. Trend line basically draws a line right through the meat. That's the way that I think about it. Right through the meat of all of the prices, all the price levels of the S&P 500 over the course of the year. So it's starting, in this case, we're on a 12-month chart, so it starts 12 months ago. And then it just draws a line right through the middle as best it can of where prices have been for this year. So if we're in a downward year, you'll see this trend line going down. If it's been kind of a sideways year, you're going to see it going sideways, but sort of splitting the difference of the bullish and bearish moves for the year. Then these the highest and lowest lines are just drawn like this. We look for the most distant close from this trend line for the entire 12 months, and we draw a line parallel to the trend line that intersects with that. And then we draw another one equally distant up here, okay? So sometimes it'll be because of an upward move that got way away from the trend line. In this case, it was a downward move that got way away from the trend line. And then finally, we draw these 2 green lines, or the system does, 50% right between the trend line and the 100 lines. That's it. All right. Now, what traders sometimes use this for is to gauge extreme moves. So if the trend line represents just sort of normal, where a lot of the trading activity has been for the S&P 500, more extreme departures might be gauged by the 50 or the 100. The most extreme becomes the 100. So look at the context that provides for what we've seen just recently. Did we get away from that trend line? Yeah, we actually got quite a distance. We actually got right up to about the 50 linear regression. And for some, they might say, "Ooh, if I'm putting on new positions, maybe I'll back off a little bit on the size of those because I'm paying comparatively high prices." The S&P has been pretty strong, taking itself fairly far from what we might call a more normalized situation there. And maybe prices will snap back or revert to the mean. That's kind of what we've seen here. Now, there was some choppiness as it did that, kind of rebounded and ricocheted back and forth a bit. But today's sell-off, as perilous as it might have appeared on just a price chart, this is kind of a different context now. We've actually come right back down to the trend line again. So quite the opposite of someone concluding that the markets are overheated. This might actually be saying, really, the markets are kind of normal, and maybe the extreme reaction was more back here. So when we sold off, the subsequent recovery was really just more kind of getting us back to where we had been had that sell-off never occurred in the first place. I hope that makes sense. But let's address question number one. This is not a guarantee of what's going to happen in the future, but is price extended from quote unquote normal? I would say not really. If the linear regression lines are the definition of normal that one uses, now it looks like it's right about normal at this moment. Now, within that, second question, this is still testing the waters for, are we overheated, or are the markets overheated or not? The question is momentum confirming any new highs that are being achieved? So the S&P looks like it's still somewhat bullish, right? We're only a percentage point or two from all-time highs. Not terribly far from those all-time highs. But what's going on with momentum? Well, for that, I'm actually going to go back to a familiar indicator. I'm going to use RSI here. So RSI, we've certainly discussed in the past. We use it every week in our TVM strategy set, but we're not going to use it in the same way this time. Let me add that back to our chart, and I'm going to click Apply. If you're not familiar with RSI, go to the channel. Make sure you do a quick keyword search for RSI, and you can check out Kevin's video there. You can check out Mike's videos on RSI. I had one called Chartists Have Been Using RSI to Trade Stocks for Almost 50 Years. You can check that one out, where I explain what the indicator is and how it's built. But basically, for some, they might use it as an indication of value. So for example, when the S&P sold off, when its RSI started to stretch down here below 30, that was a fairly unusual circumstance. And for some, they might have said that was short-term value on stocks. It might be a reversal point. Turned out to be. It doesn't always work out that way. But there's another way. Rather than looking for oversold or overbought conditions, value metrics, traders might also look for momentum from this indicator through something through a technical behavior known as a divergence. Now, divergence simply means if price is doing one thing, but our indicator is moving the opposite direction, the two are diverging from one another. And there was an example in the S&P 500 back here as we were entering 2026. It was still pretty good bullish conditions for the S&P. We were making higher highs and higher lows, hitting, let me just sort of draw these in here. Right through here, you can see transitioning from 2025 to 2026, highs were still pushing higher. But what was going on with our RSI? We actually started to see highs moving lower, meaning we weren't seeing quite the strength in rallies. Even though price was pushing higher, they didn't seem to be supported by our oscillator down here. So we call this a bearish divergence. And what it may project for some, it might be sort of a pump the brakes kind of a signal. Maybe there's a bit of a sell-off, a bit of a pullback ahead. And in this case, that is what occurred. Now, divergences aren't perfect. It doesn't mean that the S&P is going to collapse when we see a divergence. But in this case, it had a pretty decent sell-off. I think all of us have kind of a painful short-term memory of that. So what's been happening recently with RSI? Well, kind of mixed signals, in my view. If you look at the peak RSI, when we did reach overbought conditions here, we started to see those those lower highs right through there. At the same time, actually, stocks have managed maybe to nudge a little bit higher. So could that be a divergence there? Barbara says, do you always draw a line across the top of the RSI? I don't, Barbara. I think that most traders would just look to see if there is one. What I'm doing is I'm drawing the lines to just sort of let you see what I'm seeing. Is that helpful? You don't have to draw the lines there. Doesn't hurt to draw the lines. But I think that there are some RSI traders, though, who say, hold up, Cameron. Nope, you're misinterpreting this because you're ignoring one of the peaks right there. I think there are certainly going to be some traders who would say, actually, RSI is going up just fine right along with price recently. So this divergence might be weakening. It's not quite as sort of clear cut as this one back here. So, Barbara, you mean down here? Could we draw in that? Yeah, you'll notice that sometimes I'll adjust the common adjustment with RSI with a persistently bullish market or persistently bullish stocks to rather than looking for value at when the RSI gets down below 30, maybe it might be below 40. And in that case, it might be helpful to draw in a visual reference point. For that, it's using the price line tool might be best, where we draw in a line at 40. There we go. Like that. And that way we might see some lows a little bit more frequently. You can see did a pretty good job there. Here and here was okay for a couple of days. This was another short-term low. Hey, all right. Hey, my pleasure. You say great information. Thank you. You're certainly welcome. Right. But how should we bottom line this? If we're looking for bearish divergences as a potential sign that the markets are overheated, is there a bearish divergence here? I think my bottom line is going to be no. I think that because, let me just remove this drawing, because we did see these highs stretching higher again, and prices again are moving higher, I would actually say, no, the market, this indicator to me appears to still be confirming bullishness. So we're sitting kind of at a normal level, and momentum is confirming new highs. Interesting. Well, okay, before we get too excited, let's apply one more filter. We're going to ask ourselves one more question. So we've asked, is price extended from quote unquote normal? Is momentum confirming new highs? And number three, if the markets are doing well, is everybody participating in that, or is it just a few elites? Because can that happen sometimes? If we look at an index like the S&P 500, is it possible that there are just a few great big companies that are having a great time at the party, and most other companies, so really most of the markets, are not participating, but it's the strength of those big those big companies that are kind of presenting an illusion of widespread good market conditions for everybody. That's a possibility. So the question is the market breadth supporting an advance in price? That's what we call it, market breadth. It just means are there most stocks going up, or is it just some stocks dragging up the markets or giving the index a boost when there may be hidden weakness there? Because if you weren't aware, the S&P is actually weighted toward the bigger companies. So yes, it's entirely possible that there could just be a few stocks doing well while everybody else is doing poorly, and yet the index is going up. So now Zinc 560 proposed we look at a different index. I'm going to stay with this one, just not to muddy the waters too much. And instead, I'm going to be using a technical indicator. And the one that I'm going to be using is called advanced decline. All right. Let me clean up my chart here. Right click. Let's just clear the drawing set. We're going to leave these other two on here for reference though. And we're going to come back up to our Flask icon, and I'm going to type in advanced decline, add that to our chart. If you're not familiar with this, what this does, it just looks at all the companies comprising the NYSE. There's about 2,300-ish. And it looks today at how many stocks trading on the NYSE went up today and how many stocks went down. And so if there are more advancers than decliners, we'll wind up with a positive number. And then we just add that to whatever the advanced decline line value was yesterday. We just do that every day. So if we're having lots of days where lots of companies are going up, that's going to add up to a line going up. If we have lots of days where lots of companies are going down, you're going to see a line going down, and you might think, well, doesn't that just go with the S&P 500? Nope. Because if we have a day where the S&P is going up, and yet a lot of the little guys are out there going down, we'll see the advanced decline line going down against the S&P. So we're just asking ourselves here, is market breadth confirming or supporting the advance? So let's click apply and click OK, see what's going on with this mystery line that I've been describing, and I haven't shown it yet. So here's our advanced decline line. And the interpretation, I think it's fairly straightforward. If it's going up over time, it just means that there are more companies that are going up than down. That's different from just looking at a capital weighted index like the S&P 500. So what's going on recently? Well, it's very balanced. If you look at this just since the middle of April, the S&P has been working its way higher still. Not dramatically higher. We've seen a lot of that going sideways, especially if we get rid of these two lower studies, blow up the price chart a little bit more. The S&P has been gaining net, but our advanced decline line has been more balanced. That means, roughly half of companies going up, roughly half of companies going down. And over time, that's been sort of the story for the last several months. Very balanced. So not really supporting this advance, not entirely contradicting it either. Because this hasn't been a strong advance, and especially if we look at just this period since about, where are we right now? We look back to maybe the first or second week of May. Net, we haven't even gone up in the last 2 months. Ricebird, you like this? You appreciate the explanation? Good. Yeah. So there's the advanced decline line, and what the trader is typically looking for is, this is sort of their worst case scenario for a bullish confirmation, would be if the S&P is going up but our advanced decline line is going down. That's just that indication that, yep, the big companies are still dragging the index higher, but the underlying story, the hidden story there, is that most companies are not going up. So Ricebird says, so really the SPX is meh instead of bullish. I don't think that's a huge surprise, especially considering, it really hasn't done a lot. It's gone up and down, but really sideways for the last 2 months. But it's not a terribly bearish story either. Let me zoom in on just that time frame where we've kind of gone sideways. And you can see even the lows here. If I get really nitpicky on our advanced decline, the lows have actually kind of been able to nudge upward just ever so slightly. So it's not really a bearish story. It's not a particularly strong bullish story, at least through that lens. Let's bottom line our 3 questions. Is price extended from normal? Well, if the linear regression trend line is our definition of normal, the answer is probably not. Number 2, is momentum confirming new highs? Well, the RSI just hit higher highs. So there's not the bearish divergence there. It's actually a bullish confirmation. So I would say probably. And finally, is market breadth supporting the advance? It's kind of neutral, kind of balanced. Probably a little bit more influence of the bigger guys playing a bigger role, but there's kind of equal participation in this particular advance. All right, so let me zoom back out. Robert says, this show support for sell in May and go away? Ooh, that's interesting. You may want to check out my discussion previously of the seasonality chart. I'm not going to go through that because we don't have the time. But there are three indicators. Let's use that as that backdrop. Let's go place a new trade. And what I want to do today, let's go to our, remember this strategy set? I'm going to go back up here to our studies, load up our TVM strategy set, trend, value, and momentum. Rather than assessing, are we at market peaks? This is more of an actual trading system that we've discussed in the past. You can go do a keyword search for TVM. But in a previous discussion, we set up a scan for companies that are showing entry signals using the trend, value, momentum strategy set. So let's go run that scan. Let's find a stock. Papa Kilo says, which indicator you have to measure market breadth? So that was our advanced decline line, literally weighing how many companies are going up versus how many companies are going down. All right, so let's go over to our fake live account, and I'm going to go up to our, I don't want that one. Let's go to the second menu and load up our personal scan query called the TVM strategy scan. So I'm going to run this. I'll also share it. For those of you who are watching on the recording, I'll have a link down in the description. I'm going to share a link here that people can use to load up this scan. Let me share my scan here. I'll just call it TVM and share it. And I'm going to pop that into the chat window. There you go. So when I share a link like that, it just is a garbled bunch of, it looks like a URL. Don't go put it in your browser window. Instead, you come up here, you click on the little gear icon, and you go to open shared item and put it in here. Click preview, click import, and that will load it into your scans. It only works in a live account though. So this is an example live account. It has indicators in it that aren't available on the paper money. All right, but basically, just to recap what this scan is looking for, it's looking at those moving averages. So basically, it's looking for this. It's looking to make sure that our moving averages are 50 is above the 100, that price is at least above the 100, that our RSI has dipped down into the overbought territory recently, and that the MACD histogram has had a recent red shift. That's what it's looking for. So here's how it looks for that. It looks at those two moving averages. The moving average triangular 50 is above or greater than the moving average triangular 100. The RSI has gone down but crossed above 40 within the last 5 days or bars. The MACD histogram is below zero, so it's red. But also the MACD histogram is greater than it was yesterday, so it's going up. It's greater than 1 bar or 1 day ago. And finally, the opening price today is greater than the 100 triangular moving average. So yep, that's just a fancy scan way of saying it's looking for those signals on our chart. Now, I know for those that are new to this webcast series, you just went, Cameron, I don't know what you're talking about. Well, that's why our veterans they do have a little bit of a leg up because we explored that TVM strategy set in good detail just in a previous webcast. I don't have the ability or the time to re-explain it every time. So go back and check out that archive. But let's run a scan, and I'm going to run this through the NASDAQ. Let's look in NASDAQ companies. I ran it through the S&P 500 today, and there just weren't any companies giving a signal. So this scan, when you load it, will automatically run it through the NASDAQ. But let's click scan, and I'm going to sort these by market cap, and it looks like Seagate, we have Marriott, Western Digital. Let's have a quick look at Seagate and Marriott. Maybe we'll buy one of those. So here's STX. Seagate. Is the 50 above the 100? Yes, the scan requires that. Is the price above the 100? Yes, scan requires that. Did the RSI just dip below 40? Yep. And do we have a red shift right down here going from bright red to dark red? Yes. So trend, value, momentum. That's going to kind of be tough to beat. Let's see what's going on with Marriott. I actually graduated from the Marriott School of Management back in the 90s. That's a big business school. Anyway, yep, 50s above the 100, prices above the 100. In this case, it's kind of sagging back. We do have a recent touch below 40 and a recent red shift, but we're kind of losing a little momentum here. Our value is kind of falling off. I think with this one, let's buy some STX. All right, so let's go to our monitor tab. Actually, pardon me, our trade tab. STX, in this webcast series, we generally spend about $10,000 per hypothetical trade. Let's say we have a $200,000 account, we're investing $5,000 or 5% in each one, or 10,000 bucks. That would give us what? Maybe it's kind of a higher price stock. 10 shares would be $8,000. Looks like we can get 12 or 13 shares. All right, let's click on the ask price. How about we dial this down? Let's go for 13. I'm going to put this in as, let's see, price around 797, 798. Let's say that we're willing to spend up to 800 bucks to get into this trade. If the system can get it at a lower price, it will get it. 800 is just going to be our limit. Let's click confirm and send. We're going to buy 13 shares of STX at a maximum of $800. If it pops above 800 while we're talking, it's not going to buy the shares. Now, there's no commission on this trade, but there can be on some types of trades. Let's send that order off. There we go. And let's see if we get a quick fill. We go to our monitor tab, we can see our working orders right up here. Yep, there we are. Bought the shares just a shade under 797. And guys, with that, we've accomplished what I set out to do today. I really wanted to talk about some traders might be out there wondering, and I think for fair reason, if the markets are overheated, because the S&P 500 has such a good run since those late March lows, and then we've been bumping up against a price ceiling. So we asked ourselves some questions about, are the markets overheated? Is price extended from normal, gauged by the S&P 500? Is momentum confirming new highs? And is market breadth supporting an advance? So hope that was helpful for you. I know that's a lot to cover, but hey, this is called Advanced Charting Techniques. But I do hope that you'll join me each week. This is what we do on Fridays. I always enjoy the discussion. I always appreciate your attendance here. I'm going to let you go enjoy the rest of our webcasts. We have a couple more to close out the Friday, and then it's a weekend, so go have a great weekend. But as you go, remember to do a few things first as a favor to yourself and to me. First of all, make sure that you're subscribed to our Trader Talks channel. So on YouTube, just make sure you find Trader Talks Schwab Coaching Webcasts, or you can just go down below the video, click on the subscribe button right now. As I always say, it only takes a second to do that. You just click on it, you're done. It doesn't cost anything to do that. But our Trader Talks channel is where you can join the live streams. You can find playlists, or you can even do keyword searches. For example, if you don't know about that TVM search that we just did, type in TVM here, and there's my discussion of swing trading the trend value momentum stock system. All right. Now, I would also suggest, Mike is out there helping out in chat as well. Thanks for helping out, Mike. Mike and I would suggest that you follow your favorite Schwab presenters on social media. You can find us on X. You can find us on LinkedIn. So on X, you look for @MikeFairbornCS. To find me on X, it's @CameronMayCS. And if you reply to one of my frequent posts here, I just try to reply right back to you, and it allows for interaction with your presenters in between the live streams. So even if you're watching an archive, you're wondering, where's Cameron? How can I connect with him? Social media is the way to do it. So on X, you find me there, or you can pop over to linkedin.com/in and then /CameronMayCS. Again, that's my handle here as well. But give me a follow here. Reply to my posts. I can reply right back to you. All right, everybody. Thanks for giving me your time. You got 150 or more people watching right now, and 61 have already clicked the thumbs up. That's excellent. It's always appreciated. It's a nice pat on the back to the presenter. So thank you for that. But just as importantly, it also sends a signal to YouTube. Every time you click like, it lets YouTube know that this is good stuff and it shows it to more people so that more people can find our videos. So even if you're watching on the archive, that like counts just as much. I appreciate it just as much and it helps on YouTube just as much. So always click the thumbs up if you've enjoyed one of our webcasts. Guys, go have a great weekend. I'll look for you in a future webcast. I'll also look for you on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.